Good afternoon, good evening, or good morning, depending where you are in the world. For me, it is 7 in the evening. This is my first webinar where I'm doing an evening one. I have promised that I will start implementing a few of these for those people that maybe not in the UK and can't always make the morning ones. So not too sure how many people we're going to have in the room, but I do want to say hello to the 9 people that are currently watching. So far we have Marcus, Bosa, Pete, Vinco, Ashraf, Sarah, George as well, Sarah again. Twins. Exactly, Sarah. I did say I would do them, didn't I? Did say I would do them. So first of all, I assume you can all hear me nice and clearly because you're responding to me, and I'm assuming that you can see the charts nice and clear as well. Let me just refresh YouTube because once again I have that whirly sign. Don't know why it does that. So the purpose of this webinar is to really go over some basic structure concepts. We may talk about structure holds, structure violations, 2618s, any questions that you have. So again, I'm not too sure how many people we're going to have in and what level of experience they're going to be. So if there's nobody at the very basic level, then what we'll do is we'll move on to more advanced things. I'm really here for you just to throw questions at me. Give me a chart that you're looking at and I'll give you my interpretation of it, and we can discuss it and we can look at the pros and cons of it really. So more like a questions and answers session. Welcome, Ian. First of all, we have then a lot of regular people in here. So a lot of you guys have at least a basic understanding of structure. Do you first of all have any questions, any currency pairs that you want to look at? Vinco, just from memory, I'm sure you posted something in the chat this morning. It was you looked at the Euro New Zealand, the winning, I think it was the low and tight flag. Did you sell the double top? Have I got that right? That might be one that we go over. It may not have been the Euro New Zealand. It might have been another currency pair. Heck, it might not have even been you, Vinco. But guys, is there anything out there that you would like me to talk about specifically, or would you like me to maybe just run over a few currency pairs? Let me know what you would like. 7 likes and 9 people watching. I've only been talking a few seconds. Nothing out there, guys, that you would like me to go over? Any questions at all? Bosa, what about yourself? Any questions at all to do with structure, breakout patterns, brokers? Anything you guys would like me to answer? Just give me a yes if you can all still hear me. And I'll just give it a minute. We may have a bit more than a 15-second delay. I actually had to load, Sarah, 3,000 candles of data, and each candle was, I think it was on a 60-minute, so quite a lot. Usually it's just 1,000 that I have loaded on my charts, but that was for the pound CAD trade. And you know, I was 50-50 about that trade, whether or not it is going to be a low and tight flag or a double bottom. And I do talk about this within the educational material on how to differentiate between the two. And really the basic concept of it is that low and tight flags form when we're very directional, and the pound CAD has been very directional. In fact, if we just go out to the daily time frame here, it takes a second for these charts to load because again they're not my normal charts, and we look at the way price is moving, we can see a move all the way down to this level, right down to here. Now my concern is that we are at the 160-200 psychological level. However, we are at 100 level all the time on the pound cards, particularly the pound pairs, because they're such big movers. And if I drop down to the 240, I mean, you can actually see the gap. If I zoom out here, there's just absolutely nothing looking left. If I put a structure level on there and I just move to the left, it's just, there's just nothing really. So I had to go back and load more historical data, but the further back you go, the less powerful that structure level is going to be. And the rules for the low and tight flag is ideally we need to be in trend or just violated a major structure level. We've got to have a directional pole, and then we've got to have the market adhering to 2 trend lines. And that's exactly what we had. But what we've got to make sure is that it isn't a double bottom, because one of the questions I used to get asked all the time is, how can you tell the difference? Well, you never know if it's going to be a double bottom or a high and tight flag until we either violate this way or violate that way. We never know. So what we do is we just implement the rules that we've tested, and I know that in trend or in directional moves, low and tight flags occur. That's when they have the highest probability. I think our win rate is 75, 77%, something like that. And I want to keep it at that level because I know that's the most profitable time to take these. And quite simply, we had, if we were to look left, and I know you've seen the video, Sarah, but other people may not have done, if this was the structure level here, we'd had multiple tests coming down like this into the structure level. Okay, and so as we come back up into this zone, this acts as a very good resistance area. In fact, we had 13 tests, but at the structure level down at the bottom here, we'd only had 1 or 2 tests. So this was a higher probability of seeing resistance at the top than seeing resistance at the bottom. And so just by conclusion, for me, this is a low and tight flag. Now, if you was to ask me, do I like this current setup? Not particularly. I'm not over keen on it. And I cannot pinpoint why, if I'm completely honest with you. It might simply be because we have just been rallying down so much that at some point we will run out of steam. The other concern is that this here did not come into any previous structure. Now, that would not stop me from taking the trade, but what it means is that this right now is the most recent structure. So let me just go over that again. If this was the low and tight flag that had come down to here, in fact, let me do this in real. Let me do it like this. This will be a little bit easier to understand. So if we saw the market come down to here, and then we saw the market doing this, well, what's happened here is we've come into previous structure, held it, and we have a higher probability of dropping to the downside. Now, that's not to say that this is not a valid pattern, but it's just that it's occurred not at the previous outside return. But that doesn't, that doesn't sway the fact that this is still a valid opportunity, but it means I don't like it as much. But I do like the reward to risk on it, which is very, very nice. I think, are we looking at about 130 pips of profit, guys? Something like that. I can't quite remember. So quite a small amount of risk for what the potential reward is. It would be a beautiful winner if it came off. It really, really would. We will just have to wait and see. So that's the pound card. So I will go back as far as necessary. Okay, if there's no structure there, I will go back and back until we find some, because at some point there will be structure. how much and how good, well then that will leave me to interpret whether or not the trade is good enough. Hey Orsi, what part of the world are you from? Because I'm doing this webinar in the evening, 7 o'clock UK time in the evening, so that some people from America have some webinars to get involved with, because webinars I usually do are at 10 in the morning. So whereabouts in the world are you from? In fact, my geography is terrible. Just tell me what time it is where you are. Peter, you've been trading a long time. Are breakouts more available at the moment in the market, or are they not on your in the market, or were they not on your radar before? Breakout patterns typically form within directional moves and within trend. Okay, so we have various forms of breakout patterns. We have the low and high and tight flag. You will find they are the most profitable in trend. So right now we've been seeing a lot of directional movement. We've been in trend, so plenty of low and tight flags. Normal flag patterns do very well in trend as well, but don't just appear in trend. They actually appear when we see a rally, and let me just show you what I mean by that. Clear this off. So a rally is just a directional move which forms a nice pole. So they can form anywhere at any time, but typically we come down to a V point like this and see a rally. So they appear in trend, but also can appear in consolidation as well. I've actually used those types of flags a few times to get involved in the right shoulder with the head and shoulders. But you saw, Pete, today we had the Euro Aussie, which went on to win. And just to show you guys the Euro Aussie, which was a missed trade. I hate missing trades. And I tell you why I missed it. I missed it because I was in Pilates. So look at what we have here. We have a swing in the market. We have a directional pole. And then if we draw it out based on the rules that I teach on the closes of the candles, duplicate it. Why is that not duplicating? Okay, move it down. We're looking for those 4 touches, aren't we, guys? We're then looking for it to come into structure. And does anybody know the preferred type of structure I like for these patterns to come into? Or what I say in the educational material is the majority of times these flag patterns turn within the something. Fill in the blank for me. What do they usually turn at? I'll give you a clue. Is it the top of the wick, the body, or the bottom of the wick? Where do they usually turn? If you don't know, hazard a guess. You've got a 33% chance. In the wicks, yeah, absolutely. So always look for structure within the wicks. Right here, key level. If we throw in a fib, we'll just be over a 618 here. And there's the 61.8. Okay, classic setup, deep retracement, came into the wicks of previous structure, directional pole, 4 touches either side. The entry, let's see who gets the entry. Either George has been following me a long time, or he's been doing the educational videos. I don't know which one, but for me personally, I enter these relatively aggressively because I have additional filters like the fibs, like structure, like certain things that need to line up for me to get involved. So it means with my entry I can be more aggressive. But what do I need down here on the 4th touch as my entry? Do you know, guys? Ashraf. Yep, you've been through the educational material. A green candle. And the reason for that is because this red candle, even though this has come down for the 4th touch, it's not confirmed to me that this structure level here is going to hold. And just like we need confirmation in any trade we take, second chance entry, guys, we wait for a lower low, lower close candle, don't we? 3-bar reversal. It's not a 3-bar reversal until we get the third bar that physically closes and tells us it's a 3-bar reversal. And so just here, I don't want to just buy a structure level until the market has confirmed it's held with the red candle and we're seeing a reaction with the green candle. And I tell you what, that very simple rule keeps me out of a lot of losing flag patterns, because I do end up with a worse reward to risk, but I end up with a higher win rate. And from that point, you can see that rallied and went on to hit targets. Wasn't just in Pilates, I actually had to have some work on my neck as well. Through the last couple of months of work that I've been putting into just being sat here at the computer, really. You guys know I've got problems with my neck and back and arms. I'm having some problems, so I'm having to take regular breaks now because I've really been pushing the boat out. So we missed that opportunity, and Said is, I don't know if he's in here right now. He picked a beauty of a Euro New Zealand 5-minute low and tight flag. In fact, I'll just bring that over. We missed that as well. He posted it in as it was just about to hit targets, but he's still doing his training, and it was a fantastic find. Let me bring over the Euro New Zealand. Okay, here we go. It was a great find, and I praised him as it should be. Given encouragement, it was a great find that he had. So we're here on the 240. We're clearly bearish here, and it was down on the 5-minute. And he actually DM'd me and just said, is this valid? I said, yep, completely valid, and I'd missed it. And it was this one right here. So here's a swing. It was a difficult one to spot, to be fair. But look at what we did. We adhered to structure. And just like all the other breakout patterns, here was your confirmation candle, this big red candle right here, and we broke out. And if we zoom out, you can see that we had violated this level of structure, and we were moving directionally. So it was a tough one to spot, but nevertheless it was valid. So well done for spotting that. We've missed over the past month or so quite a few low and tight flags, or at least ones that haven't maybe given us confirmation. So we don't always catch all the winners. So yeah, 2 winners today. A bit sick about we missed out on. But that's the way it goes. We don't catch every winner. In fact, today we caught a 17 pip lose on the pound dollar, and we had that pound CAD flag. Was it the pound CAD, guys, that we had the flag on? Where we retested structure lows and failed to get the continuation lower. That was a real shame because we got up 22-23 pips there. But as per the rules, when we retest structure lows, we move to break even, because at that point we haven't got a confirmation we violated structure, and it was the right call, and we got taken out for break even. So just also going to bring over the euro dollar, which never gave us an entry. I'd been monitoring this thing all day. Don't know if anybody else had. I'd been looking for a rotation pattern, and as you can see, it's now rallied to hit the 382. This was not a valid double bottom because it did not come into the wicks. Nevertheless, a double bottom did form and we rallied up. Did anybody take this, by the way? Anybody still trade advanced patterns here? It was a nice winner for 25 pips. Well, 25 pips. It's not like our 100 pip winners, is it? Yeah, Vinco, it is a very good rule. It keeps you out of those, and it's the same with any type of trading. Wait for confirmation, and if you end up missing the winning trade, well, there will be more. There's always more. Nope, we don't trade them in here, do we? So let's throw with some questions, guys. Is there anything you want to ask about structure? Is there a particular currency pair that you would like to go over? If not, then I will just run over a few currency pairs that I'm looking at. Okay, Ashraf. Well, euro dollar was one of them, but that's rallied up now and hit targets. Also a little bit of bad luck today, didn't we, guys, on the, I think it was the pound CAD as well. We were in a Gartley pattern, double top, stopped us out by 2 pips and then went and hit targets. So thank you very much. Sarah, do you recommend everyone front runs or only when you get a bigger position size? If you're talking about taking targets and entering a trade, yes, I would always recommend front running. Particularly breakout patterns. I always front run my breakout patterns. Here is the pound CAD. So I've just moved it now, typical. There's the 127, so there's my target, and I am 10 pips above it. Because this is a higher time frame trade, and also it's the pound CAD that has a large spread, and also we have a 160-100 psychological number, then yes, I definitely want to front run. Now, if it's on the lower time frame, say the 5 or 15 minutes, and it's not the pound CAD, let's say it's the euro dollar that has a half a pip spread, then I will still front run by 2 pips. Because what you'll find, particularly with breakout patterns, is we can literally just tap that 127 sometimes in reverse. It happens quite a lot, I'd say 30 to 40% of the time. And the last thing you want to do is to be right, get the move, spike through, and because of your spread it didn't take. So yeah, always front run. And that goes for anything really, not just breakout patterns, but even when we're playing trend continuation. And for trend continuation, I always play for the closes of the candles, but minus a few pips. So I'd be up here. Because we never want to play for those lows, because you'll see very often that we may not quite come down to retest the lows, and we'll just rally off the other way. So it's important that, you know, when we're right with our trades, that we don't want to try and pinch every pip out of the market, because inevitably we just won't get all our targets hit, and it will cost us more in the long run. Also, Sarah, you said, do you recommend everyone front runs or only when you get to a bigger position size? Your position size doesn't matter whether you're trading with minis or micros or full lots. If you've got a bank, a trading account of 5,000 or 100,000, the same rules apply, because it's irrelevant the position size. In actual fact, the bigger your bank account balance and the more trades you do, the higher the probability your broker will give you cheaper rates. And so, for instance, let's just say the spread on the pound CAD is 5 pips. If you have a bigger bank account and you're doing more trades, they may say, okay, we're going to reduce it to 3. And so instead of you front running it by 5 pips, you might only want to run it by 4 pips. So you'll actually gain an extra pip. So there are advantages as to having bigger bank accounts and trading more, although we don't want to overtrade and we only want to take those trades that meet the rules. This week though, guys, has been very, very busy. I am personally, what am I up for the week? Let's just bring this over. It's been one of those up and down weeks. I'm up 107. There's been 14 trades we've taken. We've got dead on a 50% win rate. And is it me, guys, or when you look at this, am I just visually drawn towards the red colour more than the green? I look at that and I see more reds than greens, but there isn't. It's dead 50-50. And I don't know if that's going to put new traders off when they look at it and just think, wow, that's a lot of losses, I'm leaving. I don't know whether I should change the colour scheme. I don't know if I should make it a lighter red, but it's the right colour to have. Yeah, small losses, exactly, Ashraf. That's what people should see. But my concern is that when we get new people coming into look at this, the first visual thing they see, I'm trying to use my arrow here and not on my charts, the first visual thing that they see is reds. Secondary is greens, and they may then look up here, 14 trades, 107 pips of profit, 50-50. But yeah, if you actually go through and look, all the losses are small and the winners are bigger. That was a real shame on the pound CAD. Should have been an 18 pip winner, that. And the pound CAD flag. Anyway, that was my concern. So you think the colour scheme is okay, or maybe it should be changed? Yeah, peach. Yeah, I actually agree with you on that. Those impulsive sorts of people won't follow the rules anyway. Yeah, I completely agree with that. So keep the colour scheme as it is. See, these are the major decisions I have to make within the platform. What colour scheme to have? It doesn't help the fact that I'm colourblind. No, seriously, I'm colourblind, yeah. So that's the pound CAD. So pretty much you guys then don't have too many questions. So I'm going to go over to the Euro Aussie, which is a pair that we've been looking at shorting for a while. Sarah, yeah. That's the reality of trading. Ian, keep it up. It's a good reality to face the right way. Pip charts may help. They will see a nice upward curve. Oh, you're talking, sorry, yeah, an actual chart. Yeah, that's being built, Marcus. I'm having that built. My IT guy was not happy with me when I asked him for this. His wife was even less happy. So the way that that's going to work is it's quite simply going to be a line graph. So it will be, so the pip values will be cumulative. So what happens is, if we just look at this week, we started off at 81, then it will be cumulative, so it will minus 22, so that will take us to 59, and then minus another 18, that'll be 51, plus 28 is 79, minus 11, and it'll just be cumulative like that. So it'll actually show the chart going up, and then it'll have the date range on the left, from and to, and I want him to make it dynamic. So just like the strategy is at the moment, we go and click on flag patterns. As this updates, you'll then have the ability to just here click on create graph, and it will take you to a new page, and it will create the graph based on this data that it's showing. And that's going to be really important, because it's actually going to show the equity curve, but it's also going to show the drawdown, which is really, really important. You guys know that I'm also still working on the backtesting sheet. I've actually had to outsource it because of the problems in my neck. I can't spend any longer at the computer, and it's one major thing that needs to be done, and it's actually a formula that I can't get to work properly because it has to do about 20 different functions, this formula, and my knowledge of Excel just isn't advanced enough. So somebody's looking into that as we speak, and I'm hoping in a week or two she's going to figure it out and do it for me. And I would like your feedback on this. In fact, just let me show it to you, because guys, I think all of you here are pretty up to a decent level in terms of structure. So unless you have something specific for me to go over, I do want to just run something by you. Let me bring up the Excel spreadsheet. So this will be the backtesting spreadsheet, which is being created. Now I've created it in a way that will not just show you the drawdown for your overall portfolio, it will show you your drawdown for your specific strategy. And it will show you 3 different stop losses. And I'll get back to the chart in a minute. Just let me see what people are saying. Sarah, will you possibly re-evaluate advanced patterns in the future and add them back in? I don't know, Sarah. Here's the thing, I started off trading advanced patterns, and I actually created a spreadsheet similar to the one you're looking at now, and I had thousands of advanced patterns in there. And there's no doubt that they're profitable, but you go through big swings of big wins and big losses. But overall, and I know you trade these a lot, but overall for me personally, they were the lowest. They were the lowest probability trade, and what really bugged me is I always had to move my fib for targets to be hit. That meant when I was out and I got an alert to say I was close to targets, I had to log onto my phone, adjust the fibs, which was a pain, or it went off in the night, I had to adjust my fibs. And in a way, because they weren't as profitable as the other ones, they weren't, you know, we have a lot of signals here that are just more profitable at the end of the day, so it's unlikely we would bring them back. Ashraf, then our eyes will only see mountains of pips. Ian, what about risk to reward on each trade in pips? That isn't included. I was going to add that, but I've got to look at the amount of time that I spend putting this data into the website compared to just spending time helping other people trade and learning how to trade, because it's a lot of work for me to do. You know, I create the videos, I upload them to the system, I have to update the system when we have a win or a loss, send out the emails, and so I did think about that, but I also didn't want the website to be too cluttered with too much information. And at the end of the day, the risk reward as well is something which you'll go and test. But this is the spreadsheet. It looks relatively basic, but what it will do is you'll actually just, this sheet has been built to be very, very time efficient. Okay, so you'll find that a lot of companies out there will collect the entry date, the entry time, the specific rate of the currency pair at entry. Then they'll collect the exit dates, the exit time, and the specific currency rate. Then you've got to put in the strategy, the entry tape, the time frame, and that is very, very time consuming. And so my spreadsheet's been built a different way. So you simply input the date, the strategy, your entry, the time frame, and then all you do is, based on a 180R target, you input if you went for target ones, what you won, if you went for 2 targets, what you won, and if you lost, what you lost. And it will actually pre-fill the ATR for 1.25 and 1.5, so it will check 3 stop losses for you. But as we go down to this level, the real key turning point with this is this main totals box right here. If you look over here at the strategy, so I've included 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of the most profitable strategies, and it will tell you the number of trades you've taken for trend continuation, the percentage taken, what you earned for target 1, the win rate, what you earned for target 1 and 2, what the win rate was, and what it was for 180R. And it will tell you right here that the drawdown for trend continuation was minus 1.2%. So when you've done your back testing, it will actually tell you for every single strategy what your maximum drawdown is. Now, a lot of companies out there don't do that. Now, please correct me if you know of a company that does this. I'm sure there are a few, but instead of just having, like we have up here, your main drawdown, and this is the Aussie dollar CAD, guys, so this is the main drawdown for all of your strategies. Instead of just having that, it will show you the drawdown for every strategy. Not only that, it will show you the maximum number of wins and the maximum number of losses for that strategy. So let's say that you're looking at the drawdown here, but you have one strategy, and let's say it's triangle just here, that has a drawdown twice the amount as any of the other strategies you're trading. So that might be then a strategy where you maybe want to reduce down your position size by 50%. Or let's look at it the other way. We have low and high and tight flags just here. Let's say that the drawdown here is actually the lowest. And what you find is that you actually, when you come across a low or high and tight flag, you may want to trade low and high and tight flags with a position size of maybe double the amount of all the other strategies. Okay, so we're not just looking at the Aussie dollar CAD as what the whole drawdown is. No, let's split it down into the individual strategies. And at the end of the day, if your most profitable strategy is low and high and tight flags with the minimum drawdown, well, don't you want that to have the highest position size on it? But yet it will still work out what your overall drawdown is up here. So if you don't want to go down lower than a 10% drawdown, you can just alter your figures here so that that's 10%, and it will mean that you will just optimize those strategies, those higher probability strategies. And it will do that based on 1 ATR, 1.25 ATR or 1.5 ATR. And again, it's built for time efficiency. So you simply put in target one here, 50 pips, move on to the next one. And that's it, done. So that's the way I built it. Let me know your thoughts on that. Is there anything else that you guys maybe would have wanted adding to a sheet like this? It does also have the graph on here, your equity graph, so it'll actually show you your equity curve. Shows you other things as well, but that's the basics for it. Yeah, I think for me that was the key thing that was missing from a lot of companies when they produce these sheets. Is it really didn't tell you. It told you your overall win rate, the maximum number of wins and losses, but it didn't. It just didn't dive deep enough into the strategies. Now, when I did my back testing, I didn't have this sheet. I created a different sheet that did something similar to this, but I actually built it specifically for patterns for bat ciphers and Gartleys. So this sheet had to be created from scratch. It may not look that pretty, but I tell you, it will certainly, if I had to go back and redo my back testing again, I would like to know what the drawdown was for each strategy, because I tell you now, just like low and high and tight flags, there's going to be a time in 6 months when I have enough data on the website to say, okay, this was the maximum drawdown. I am now going to increase the position size by 50% on low and high and tight flags. And I'm going to reduce the position size by 20% for 2618s. And again, this is just the Aussie dollar CAD. Down here at the bottom, there'll be another currency pair. There'll be the Aussie dollar New Zealand, and so on. This actually does currently about 500,000 calculations, believe it or not, to work out the drawdown on 3 different stop losses and to work out max wins and losses. So it runs a little bit slow. But I'm also speaking to, as I say, somebody who's an expert in Excel. She's going to speed it up a little bit for me. But 90 to 95% of the work is done on it. I was just struggling with this final equation that it was just beyond me. So, but yeah, that would be key to really boosting your account. Yeah, there are many ways, guys, aren't there, to boost your account. Give me a few examples of how you would increase your return on investment. Throw it in the chat. What do you think are ways that we can do it? I'd like to hear what you guys think. Yeah, exactly, Marcus. And I had to actually limit it to just the most profitable strategies, because again, it does 500 to 600,000 calculations, and when we add all the other currency pairs onto it, it's going to be a little bit slow. So okay, higher risk to reward. Yep, that's one. What about when we take a standard £10,000 account and at the end of the month we've made 3%, so the balance is at 10,300. At that stage, can we say, okay, we're now going to increase our position size, so instead of it being based on 10,000, we can increase it based on 10,300. And the month after, it's not going to be 10,700 because you've increased your position size, it's going to be 10,700. And the month after, if you were winning every month like this, compounding exactly, you're on 11,000. Okay, now if you were able to implement this strategy with the drawdown, you can realistically increase this significantly. Now, there are other ways of doing this as well. I know the company that I'm still registered with, Tier 1, they have a smooth money management ratio. That's one of the ways that they do it. And I did look into this. I think the way that they do it is that, I'm just trying to think actually, when they reach a certain level, they in fact, you know what, apologies guys, I can't quite remember how they did it. It didn't suit my personality that way, because as you increase your position size, if you was in a hot streak, it increased your position size for you, but then shortly after, as soon as you hit your drawdown, it instantly tells you to reduce your position size. And I didn't like the idea of that. What I much preferred the idea of was knowing exactly the drawdown of the strategy and increasing the position size of the highest winning strategies. And that way then I didn't have to worry about increasing or decreasing position size using a smooth money management ratio. In fact, if I wanted to increase it even more, I would simply do this at the end of the month. We've made 3%, so I will increase my position size by 3%. And that is not aggressive in any way in doing that. That's just compounding your position size in a very safe way. So if you add these two money management systems together, come the end of the year, you know, you're gonna, I wish I had all the data right now to implement it, put it that way, because 75% win rate on low and high and tight flags, I would have increased my position size by 50% on all of them. So I would have been doing significantly better than I am doing at the moment, and we're not doing bad. So does that make sense? Does everybody like that idea? And please be honest and truthful, because this is going to be sent out to new traders that are existing. Is if there's anything missing or they don't like, please say it now, because I've got an expert who's going to be finalizing this spreadsheet for me, and I can make alterations to it. Oh yes, Marcus, it will have a huge impact on the equity curve. Max wins and max losses as well is really helpful per currency pair. So yeah, it also does tell you up here based on your time frame as well. So like we've got the dailies here, there was 5 trades, so 45.5% of your trades were taken on the dailies. You made 26 pips, had a win rate of 80%. This is just test data that's in there, just making sure that everything's working correctly. But yeah, this was the kicker. So you just go down here and you'll change it to blue, and it will tell you based on a 1.25 ATR what all the figures are, and if you change it to purple, it'll tell you what a 1.5 ATR is. And that will then do the next phase. That will tell you that actually, if for trend continuation, which is here, the drawdown was less based on the purple, based on the 1.5 ATR compared to the green, which is the 1 ATR, well then you know that for trend continuation on the Aussie dollar CAD, you will make more money using a 1.5 ATR compared to just a single ATR. Excuse me a minute, guys. Sorry about this, let me get a drink. So I really wanted the sheet to be as in-depth as possible, but without having that awful sitting there for months on end inputting data. Now, one downside about this form, okay, because we do not capture the exit date or the entry time or the exit time, then what that means is that if your strategy is time specific, so let me clarify that, if you can only enter a specific strategy between 9 and 10 o'clock, well, this doesn't capture that information. Now, none of my strategies do that, so this form works brilliantly for those. The other thing it does not show you is that for your specific strategy, it doesn't say that it's the most profitable between 10 in the morning and 2 in the afternoon. That's what it does not show you. However, there is a counterpart to that. I'm not a great believer in that because my trading is based on structure, and whether it's 10 in the morning, 2 in the afternoon, or 4 in the morning, structure is structure. We either hold it or we don't. Therefore, I came to the conclusion that based on my strategies, it was irrelevant. And so again, it's very time efficient. In fact, all you would do is this. So you're looking at potential setup, you're going, okay, the risk is from here to here, 40 pips, the reward is from here to here, it's 119, that's it. You then go back to your spreadsheet and you simply input, well, if it wins, first of all, you'd only measure one of them out, so it wins for 119, so you just go 119, done, and you move on to the next one. So anyway, not quite finished yet. Let me answer a few of these questions. Excuse me. Do we need a notes box? I didn't add one, okay, and it's a very good point, Ian, and I'll tell you why I didn't add one in the end. Is when I started doing this originally, I started adding notes, and if anybody's done hundreds, if not thousands of trades that they've back tested, then when you add the notes, you actually end up with hundreds, if not thousands of notes, and they become irrelevant because you're working your way down the notes and you're 20 in. But what do you then do? You then have to make a note about the notes to say, okay, that note said that the RSI was not oversold there because we had structure looking left. So make a note of that. 20 notes down, you're still making notes about notes, and it doesn't give you actual hardcore data back, particularly if you have thousands of strategy, a dozen strategies and hundreds, if not thousands of notes on there. I used to do that. In the end, what I did, I took pictures and I ended up with hundreds and hundreds of pictures, and I printed them out and I looked through them one by one by one. And by the time I'd finished, I'd completely forgotten what the picture was on the first one, and it kind of became irrelevant. So yeah, I understand the reason why to add notes. It can be useful. In the end, I decided it wasn't. But if you want to add notes, you could do it. It's really easy to do. You just move this out of the way and just write it in here. Just add a notes box. It's up to you. Personally, I found at the end of the day it was a bit of a waste of time. But each to their own. Marcus, does the main total include all time frames, or can I define what the strategy per time frame results are? Okay, that's a good question. So no, it doesn't, because that actually would mean creating the spreadsheet itself would not be able to calculate that many calculations, believe it or not. But that's a very good question. So if you was looking at the dailies, would trend continuation on the daily, could we look at the drawdown, compare it to the 240? And it doesn't do that. But again, if we look at my strategies, and this spreadsheet has really been developed for my strategies, all of my strategies use structure. So regardless whether it's the dailies, 240, 15 or 5 minute, structure will be the same. And so even though there may be a difference in the actual drawdown because it's the dailies compared to the 5 minute, your win rate or your same reasons for entering should be the same. But to answer your question anyway, I couldn't add it because these calculations down here, just to work out the drawdown requires 4 or 5 boxes, and then to work out the max wins and losses, and then to do that for every strategy and to do it for 3 stop losses as well in a time efficient way, Excel would actually crash. And that's the problem I had originally. In fact, if you look down here, I had to add a little helper column because it was running a little bit too slow. So yeah, it's not perfect, the spreadsheet. It's as good as I could make it. Yeah, so Khan, yep, welcome Khan. Sorry I'm late, I was on my way home. How does the SS determine the difference ATR? How does the SS determine the different ATRs? Okay, Orsi, are you just talking about this? There's a very simple formula that goes in just here, and all it does, so if you put in target 1 here, 50, it will automatically pre-fill target 1 and target 2 with 50. If you put in a loss of 100, it'll automatically work out what the loss will be, which is 125 or 150. So it'll pre-fill that data for you. However, if you end up where one ATR loses 100 pips, but 1.25 wins, well then you go in, you minus the 125 and you put in a win of, say, I don't know, 30 pips, whatever it may be. So all you need to do is just go back and alter that. But when this is finished, I'll be doing a full video on it, and this will be available to all the fully subscribed members, and it will be I got a couple of final parts to do in the educational part of the website. This is really one of the key ones, because this will really determine your position size, your risk, and this will really boost your account with that drawdown. I'm really tempted of going back and doing all my back testing again, and just putting the data in and doing the different position sizes. That would make it very difficult. Well, it might make it difficult for sending out signals, but I'm going to wait until I've got enough data on the spreadsheet on the website. Then I'll download that data because it's my personal data, and then I'll import it. Actually, that won't work, thinking about it. Anyway, so that's it. Yeah, Taylor, I think it's quite good. I may be wrong. I'm sure there's companies out there that have gone into this much detail when looking at the drawdown. You guys let me know, have you come across any companies that currently do this? Am I unique, or am I just a sheep following everybody else? I know quite a few of you use different spreadsheets from various places. I think Pip Society and things like that offer those spreadsheets. I'm not too sure if you guys use them, but anyway, that's the spreadsheet. Not quite finished. Go on, Pound Cad. really want this one to win. My goal, I I don't actually have a goal every week, but my goal is I would love to finish every single week 100 pips in profit. Not just for me, for everyone else as well. I would absolutely love traders to get to the point where they understand structure, and they have not just understanding, but they've got experience in looking and trading structure, and they're at the level where they can easily implement other strategies and then create their own strategies as profitable as they like them. Sarah made your own spreadsheet. Very, very good of you. When I looked around, if I'm honest, I just couldn't find one that did what I wanted. My first spreadsheet took me 6 weeks. Took me 12 to 15 hours a day for 6 weeks. Literally, I didn't have a break. It was horrendous. I don't do that anymore. That's when I end up ruining myself, and that's why I'm having a few breaks over the past few days, because I'm noticing I'm doing a bit too much work, my back's playing up, and I'm not going to put myself back in that position, because that also affects my mentality, which will affect my trading, and I'm not doing it. So Sarah, what's your spreadsheet like? How long did it take for you to create? Are you amazing at Excel formulas? Because if you are, you could correct this problem I've got. You might be able to do it for free as well. I've got to pay this woman. Hate paying this woman. I've done everything myself except this one bloody thing that I can't do. Vinco, never seen anything like that. That's good. Taylor, old school, write everything down. Do you know what, Taylor, when I first started, before I created the spreadsheet, you may know this, I had problems with my hands. I couldn't move my fingers for 2 years, and I couldn't use the mouse, so I did everything by paper. I had sheets and sheets of paper, and I used to sit there with a calculator, work out what was the most profitable, and actually doing it that way, it's very quick because you're just writing it down instead of data inputting into an Excel spreadsheet. And from there, once I got a good understanding of the strategy I wanted and how to attack it, I then created the spreadsheet. So it wasn't long ago actually I cleared out my cupboard and got rid of about, I'd say about 6 inches worth of stacks of paper, which were all backtesting, handwritten backtesting. Lol, I'm alright, I could look. My spreadsheets are pretty intense. Took 2 months maybe. Oh, okay, pretty cool. So, pound CAD is back at break even. That's good. Let me just run over the Euro Aussie then, guys. Sarah, I have asked you this before, and apologies, I've got a memory of a goldfish. You have a fairly good understanding from what I'm looking at of structure, and I know advanced patterns. You used to be a member of Tier 1, didn't you? And I'm sure I've had this conversation with you already. While I'm waiting for Sarah, Euro Aussie, let's just go and take a quick look at that. Yeah, I thought so. And is everybody enjoying the new platform? We've just completed a month, our first month, just over a month. I hope everybody's enjoying it. I have been going around and sneakily PMing a few people and asking them, have they found it okay? Is there anything missing? Would they like to see something different? Just getting a feel for it, and the feedback I've got is pretty good. What about you guys? If you say anything negative, I can remove you. Just bear that in mind. Euro Aussie. Let me bring over the Euro Aussie. Where's the Euro Aussie gone? Okay, Euro Aussie. Okay, so Euro Aussie, guys. I'm still looking at shorts. We did have what could have been a first chance entry on this. So we had a move higher, a pullback, a move higher, we had the double top, we had the violation to the downside, we waited for the 2618, we failed, we had the break below. So we can highlight our first chance entry here. our second chance entry, which is the candle bodies, and our last chance entry, which is up here. And then the very, very last chance entry will be the left shoulder up here, where we'll look for a rotation pattern. So plenty and plenty of ways of getting involved here. Now, I was looking at this level right here, first chance entry, because we have first of all been moving very directionally. Second of all, I'll ignore that. I thought we had the 16,000 there. Let me drop down the time frames. I'm just going to catch up on the chat. Latch, very high quality, will try and be there even more. Great job. Yeah, lovely, Latch. You know what, Latch, it'd be great. Latch creates lots of YouTube videos, and I'm really happy he is, to be honest with you, because when I started, what was a real key turning point, God, there were so many turning point in my trading, was creating YouTube videos. And I'm so glad Latch is doing it, because I have seen, since he's been doing his YouTube videos, and I think he's on like 46, 47 or 48 now, number of YouTube videos, he does his review first of all. So he analyzes the market. Then if he gets in a trade, he records it, and then he does a review afterwards of what he spoke about in the first video. So like I send out the quick hit review video talking about what's going on, he does a review after it talking about the outcome, and he actually gets to analyze and review what happened to the market beforehand, during, if you got in the trade, and afterwards. And for me, that really is key. And if you read Mike Bellafiore's One Good Trade book, he says in there that he gets his traders to go and record the trades and watch them all at the end of the day, because you get the experience of being in the same trade time and time again, and you see things that you didn't see before. And as a result of that, you get ideas. You think, oh, look at that, we've double topped again in a channel. Maybe that's something I should back test. It would reduce my risk by half and increase my profit by 30%. And there are just things that you pick up on. And it gives you the experience of being in a live trade many times as well, because you get to watch the video. So, and I'll give you credit, Latch, because I still watch some of your videos, not all of them anymore, unfortunately. I'm just a little bit too busy, but I still do watch some of them, and I can see the difference. And I'll tell you now, Latch has got the makings of a very good trader. I noticed that he looks at a lot of similar things that I do when we look at structure, potential breakout patterns, things like that, and certainly well on the right path, that's for sure. Taylor, it's a great platform, Chris. Nice work. Thanks, Taylor. Sarah, really liking it so far. I just get lonely quiet during the daytime. I get FOMO from time to sleep. Yeah. Sarah, do you know any other traders that are kind of like in your neck of the woods, you know? Give them a shout, you know, get them on the platform. We haven't really started any marketing yet, just to let you know. So really, it's only the people that were currently subscribed on my YouTube channel. I've only got 340. That's all I've got, guys. And I wanted a few people to test the system. You guys know that we've had a few system issues, and I wanted all those ironed out. When phase 3 is finished, I told you about those in the chat this afternoon, we'll move over to a more powerful server. We'll start some marketing then, and start getting a few more traders in. I always feel that if the product is good enough and it's performing well, it will generate its own business. And I think word of mouth undoubtedly is the key to generating business. And I'm hopeful that, you know, just one or two people may mention it to some other trader friends, who will mention it to a few other people. And all of a sudden, those 10 people that joined that like it for the month, it then spreads out, doesn't it? It spreads out, and those 10 people tell another 30, and word gets out. And you know, I would love nothing more than that. So that's what I'm looking at doing. Finco, like the platform, the implementation of Telegram. Yeah, it was a bit late implementing it, wasn't it? But again, that's why we did the test scenarios. So it's instant. That's the thing, it's instant. It's as fast as I can make it. Literally within 5 seconds, boom, you have it. So it's just a screenshot that I do. Latch, the consistency in analysis has improved drastically since YouTube. Couldn't agree more with you that and saying that. Yeah, absolutely, Latch. And I know Taylor makes some as well, so check out their YouTube channels. In fact, guys, if you want to post them in here, you're more than welcome to. We've only got 14 people watching now, but typically we have something like 100 to 150 people that end up watching it over the course of a week. So by all means, throw your YouTube channel in there. No problem whatsoever. Great vids, Latch and Latch, thank you. Okay, so back to the Euro Aussie. Oh, pound CAD is 7 pips in profit. Peter, start praying. Pete prays when a trade is up and down. It really helps us with the chance of it going on to win. So we'd come into the wicks and I was looking for a first chance entry. If we go to the 60, we had this right here, the wicks. We'd come up, we'd held structure. We had the RSI that just tapped the overbought. I'm rubbing my hands together, thinking brilliant, we're going to get a nice little retest up here, and we didn't. Instead, we've come down to structure. So doesn't look like we're going to get a first chance entry on this, but guys, there is hundreds of pips up for grabs on this, and I will be aggressive when the opportunity is right. All the praying signs Pete's got there. Let's drop down to the 15. How's the CAD Yen trade doing, Pete? Are we up or down? Not much here on the 15, to be honest with you. Moving higher. But we've now come into structure. Tell you what we could see here, guys. We hit structure. We saw a swing in the market. We're seeing directional movement. We could be seeing a flag. Where would that flag turn? It would turn in the wicks. Where else would it turn? It would turn in the wicks. However, because this is not in trend and we've not violated the lows, targets would have to be for a retest of the lows. This is on the 15 and it's on the Euro Aussie, and I know we have Aussie news out at 2:30 at night my time. So this goes for you as well, Sarah, because you're on the other side of the world. You get to deal with those horrible Aussie news events that happen at the wee hours of the morning. I just stay out of those, particularly on the lower time frame. We see those horrible spikes. And the same with the New Zealand, if they happen during the night time here in the UK, and they're just horrible, so we just stay out of those. The best trading times are undoubtedly the London and the New York Open, which is just UK time. We're quite lucky, all those people that are in the UK. Latch actually predicting a move up very short term on this pair. Yeah, I think we could see a move higher now. As I say, I was looking for that first chance entry. We didn't get it, so there's no rotation pattern. So I think we could go deeper. And that's fine, because this is a huge outside return. Look at the size of that. But seeing something like a big flag pattern here, then I'll be rubbing my hands together. But we're days away from that. And even taking a lower close here on the 240 might be too aggressive. It might have to be done on the daily. We'll have to wait and see. But I've got nothing on that for now. This is probably going to run into next week. But I will be looking at the lower time frame for structure. Any questions on the Euro Aussie, guys? Khan, Pete, are you looking at a chart of ECG? Lol. Yup, and nice reverse on 60 would be something to put on the alerts. Exactly. Latch, did you attend the event in London at all with Jason and those other traders? I know George was telling me it was a fantastic event. He had a really good time. to 300 traders there. And you know, I was in England during that time, one of the very few times I was in England, because I've not met anybody yet, believe it or not, because I'm here in Tenerife and I'm not always busy, always busy. Then I just never was able to make an event, which is a real shame. I would have liked to have gone and actually met people face to face. Love how you keep saying lol. Is that me? Or is that Latch? So CAD yen, just 1 pip up. Have faith, Pete, have faith. It will go on to win. This is a nice looking setup. We're back in profit. We're back in profit. So we will just simply hold those. Other than that, guys, the only other one that I had really was the Euro New Zealand. Have you found this beneficial? I know we've not really gone over too many charts. This evening was really for any newbies that really wanted to talk about structure and specific questions. Would you like to see another evening webinar like this, maybe for an hour? Maybe go over, again, anything, you know, a trade we took that maybe you didn't agree with, or trend analysis, anything like that. Let's bring up the Euro New Zealand. Ian, yep. Ashraf, yep. Sarah, yep. Okay. I know that as time goes on and we get new people in, there'll be more basic questions, structure and things that we'll go over. But here on the Euro New Zealand, pretty much like the Euro Aussie, still looking short, that head and shoulders. Still looking short here. AB equals CD pattern as a minimum down to this area, and we're moving directionally. Just going to take a look at the 240. Marcus, yep. Ian, yep. Okay. A lovely big lower low, lower close candle on the 240 time frame. If I put a structure level on at where that came to, well, we violated that level. We've got a little area here, We have gone oversold by 11. There is no psychological number. There is, however, a 1618 inversion right at that level. And 1618 inversion, guys, what is it? It is the golden what of ratios. We do also have a 127 extension down there, so I'd be a little bit cautious at shorting the market based on that 1618, that golden ratio as it's called. We typically see a reaction plus the RSI, minor structure though, so we could see a little bounce here, and I'd be a little bit wary about maybe taking a trend continuation short. But if we're reading structure, move lower, pull back, move lower, pull back, move lower, nope, not that one, move lower, pull back, move lower. This would be the outside return, and I'd be paying close attention to this initial level of structure, which also, if I put a structure level on just there, does come into the 16700. Can we throw any fibs on here, guys? Okay, from swing high to swing low, we have a 61.8, just 3 pips above that psychological number. From this highest point, it's not really a swing though. So yeah, that would certainly be an area I'd look at up here at that 61.8 and at that 6700 psychological number. but that's going to be tomorrow now. Pete, how do you choose what's relevant or not when drawing a trend? Is there something specific that you're asking? Like, do I ignore a candlestick formation, for instance? Do I ignore fibs, or just in general? Because I can tell you a list of things that I look at whether we're in trend or not. And I think I'm going to put together just an educational video on this. So when I first look at a chart on the dailies, in fact Pete's just said, like you just did, you ignored some small swings. Oh, okay, it's just whether my interpretation is whether or not that is an outside return. And you just experience. So let me do it again from the swing high. This is a move lower and an outside return. This is a move lower and an outside return. This is, ignore that. This is the move lower here because we physically did not make a new low. So this is the outside return. This is the new low. This is the outside return, and so on. And it was just, I ignored this just because we didn't retrace upwards. Yeah, so if we look here, we had a move lower, then we moved up. Then we had a move lower, then we moved up. This was just sideways movement, so just a little bit of discretion, Pete. That's why I ignore it. Some people may not. Some people may look at that and say, yes, this was the actual structure level. And it will make a difference, because if this is your highest point just here, right here, then because of this wick, then technically we did not violate it. However, what we've done is we've closed above this line, and we've closed within this wick. So that makes this really a last chance entry. And so with a last chance entry, I could only really look for rotation patterns, so a double top or a head and shoulders. And that makes a difference, because if I don't include that and the trend is like this, a move lower and a pullback, then if you're looking for a lower low, lower close, well then this was it just here. So just depends how you read trend. I mean, you could take that, to be honest with you. Yeah, you could take that. But for me then, I would just have to look for a rotation pattern in that zone. Let's drop to the 15, see if there was one, because we hugged that structure line for quite a while. Yeah, there you go. It's not valid, but look, triple test. But it occurred beyond the highlighted area. In fact, let me go back. Okay, let's do this again. So last chance entry, we highlight the wicks. And we drop one time frame lower, and if it's within the wicks, it's valid. And as you can see, it's not. But look, it was a triple retest, and that was the turning point. So it's down to your own interpretations to what you think, if it is an outside return or not. It is a little bit subjective, yeah. Unfortunately, while everything is rules based, there are things that are subjective. Subjective is also just another word for experience. You know, it's just a little bit of experience, but it doesn't mean I'm right. You know, it could easily have been structure that held and was the turning point, and I would have missed it. Whereas if you took that as the outside return, it would have been an opportunity for you. I'll get the surfboard can or sound waves. Some of that won't be a bad idea. Made difference in the frame. Thanks, Marcus. 2618 after the triple test. Yeah, look at that. Beautiful. Pulled right back up here for that 2618 and shorted, and you could short the market. Now that would have been, on looking at it, an okay opportunity, because what's more powerful than a double top? A triple top. So just reading trend here, move lower, yeah, pullback. This made a new low, that was the pullback. This, you could now look at this as the pullback, then you made a new low and the pullback. In actual fact, yeah, there you go. That would have done it. If you, this was what we looked at on the 60, this bit here, which I ignored. Now, if you read the trend on the 15 and you include this, what have we just done here? Let me know, guys, what have we just done? What have we just done above this area? We violated it. Yeah, exactly, we violated it. So if you were somebody that took that on the 60 as your outside return, this would have been invalid for you. However, if you ignored it, your outside return now is this level, isn't it? Everybody agree? And does everybody agree that if I highlight the wicks just here and I zoom in, even though this was a triple test, the actual valid double top occurred here? Everybody agree on that? Everybody see it? And from that point, we violated, and then this would have been a 2618, which I would have got involved with. Did this trade happen today? 4:30 in the morning. Thank God for that, because it would have been the third winning trade I would have missed. Oh, I hate missing trades. I hate missing winning trades. Do you find that, guys? you end up missing a lot more winning trades than losing trades. Drives me insane. Okay, so yeah, discretion. That was discretion. That for me, because we didn't see the return, I would ignore it. And then as you drop down the time frames, if we draw out the trend, this is the outside return. Boom, there's your setup. So your risk on this trade would have been that much. Let's just make that red. And this is going to be a decent trade because it's the Euro New Zealand. First targets, retest of the lows down here. Make that green, and green is for money. And we're going to zoom out. We're going to go to the 240 and we're going to say, where do we think price can come to? Certainly this level. Right, had we already gone past that level? Okay, okay. This is quite interesting. So what we did, actually, sorry guys, let me confirm this. Okay, that's the very low. Okay, so if this was in real time, we held structure here, we saw an entry reason up here to get short. We could take first targets at a retest, and it would then be your decision whether or not you wanted to play for an extension because of two reasons. One, we had the 16700 psychological number. Two, it came in at the low of this structure level. Or you can flip that around and say that you believe price is going to violate that level because we saw a very, very small retracement and a long extension. So what do I always say? Long extensions, small retracements. The smaller the retracement, the bigger the extension. So we would have had a higher probability of violating the structure level than holding it. So I personally in that instance would have played for an extension. That extension as a minimum would be this very minor level just here. But I would also look for some fibs, guys. We can invert that. I would look for a 1618. So I'm just going to keep that 1618 inversion on. Look at where it comes in at. Targets would almost be hit. If not, they may have already been hit if you was taking this trade, because you would front run. And we could throw an extension on as well and maybe look for that 127. Take it from the very highs. So swing high to swing low, and you've got the 127 there as well. So maybe you didn't want to play directly for the 1618. Maybe you wanted to play in between the two of them. In particularly, that psychological number 166.50 is a good psychological number, and in that instance you would have got two targets. So that's how I personally would have played that trade. Second targets would have been there, and we're going to make that one yellow. So you would have risked on that trade 23, target 1's 35, target 2's, which you would have got 68. So working out my maths quickly, using my head, 17 plus 34, 51. 51 pips. So it happened at 4:30 in the morning, so that's my excuse. But yeah, good trading opportunities are everywhere. Spotting them and being involved in them at the right times, when there's not news events, being at your charts at the time, and specifically knowing the right strategy to apply to the right setup, and knowing what structure level to ignore and what not to ignore, just comes down to experience. But that was a nice setup. I would not have entered the double top because there was no RSI confirmation. But certainly once we'd had a triple test and we violated it and pulled back, and the fact that we were in trend, yeah, I would have been all over that trade. Would have been all over it. Thanks for pointing out that winning 51 pip trade, which I missed. Okay, so Peter Power of Insight, first chance entry. Yeah, we've got three chances, haven't we? We've got first chance, second chance, last chance. And we implement those strategies not just in trend continuation, in advanced patterns. We look for rotation patterns, don't we? You know, within the wicks, just like we do within the first chance and the last chance. We implement the same basic structure in all the strategies. And that's why it's incredibly important to have a good understanding of structure and how to read it. Because once you have that, it's actually quite easy to implement those strategies. So we have head and shoulders. Okay, we're in the wicks on the left shoulder. What am I going to look for? I'm going to look for the last chance entry. And all of a sudden, trading makes sense. And I'm a great believer in things that make sense. If I go to the doctors, I'm absolutely awful. If I go with my wife to the doctors and my wife will ask a question and she'll be satisfied with the answer, and she'll be getting her handbag ready and getting ready to leave, and I'll say, well, we're not done yet. Hang on a minute. Why is that? Why are we doing it this way? Why are we going for that test? What will the outcome be? How long will it take? And I like to know everything. And because when I know, not everything, but when I know everything, I can then very easily understand it. And since I know pretty much everything about structure, in other words, how to read it, then it's very easy for me to understand. And it's very easy for me to understand that we see rotation patterns in the wicks. It's very easy for me to understand that when we have a swing in the market and a directional pole, we could see a breakout pattern, particularly if we're in trend. It's very easy for me to understand the psychology behind low and tight flags. So the market is moving very, very directionally here, short. And the psychology behind flag patterns is that after a rally, we start to see profit taking. And when we see profit taking, we start to see the market rise. But we start to see it rise in a channel. And all this is just relief before all these sellers that took profit, and then all the buyers that got involved here for some obscure reason because they had an automated system that told them to buy, pushed the market up a little bit. Then the conservative and knowledgeable traders said, oh, hang on a minute, this is going to be our entry here because it's coming to structure. We've had a confirmation candle right here. We had the 16700 psychological number. We're in trend. This is the point we're going to turn. And that's what we did, guys. We waited for confirmation. We sold this candle. We picked the exact turning point. And I actually can't remember how many times over the past few weeks we picked the exact turning point. In fact, got to do Marcus's heading here. The Euro Aussie 124 pip winning complex pullback trade. That thing went 4 pips into arrears before it turned and rallied and hit targets. And we just had a lot of confluence at that area. Unfortunately, his data was out by 1 pip and it didn't meet his rules, so he followed his plan. Luckily, my data was out the other way by a pip and was valid for me. So, yeah, lol. Marcus is secretly still banging his head against the wall on that one. Can I place orders so won't miss it? First chance entry. Are you quite an aggressive trader? Because if you're setting a limit order, because I'm not too sure when you posted that in, are we talking about this flag? So you would actually set a limit order just as we come up to retest the highs here. Is that right? And again, there's no right or wrong way. If you're an aggressive trader, that's what you would do. If you want a higher win rate, you want to be a little bit more conservative. And I like the best of both worlds. I like to be aggressive, but I like the confirmation. And I think that's where the profit really lies. Is there a potential flag on the dollar CAD 15? Dollar CAD 15. Let's bring it over. Dollar CAD 50. Ooh, there could be, Sarah. Have you been through the educational material, Sarah? Just curious, that's all. Okay. Okay, let's do the high time frame analysis on this. Working my way through it. Yeah, okay, cool. Just out of curiosity, because I'm just wondering what you thought of it. Please be honest. What I don't have is a review section on the videos, so I don't have a counter for the number of people that have watched it, and I don't have a review section for people to leave comments and say, you know, can you explain this a bit better and stuff like that. So I don't really get any feedback from it, so would be nice. Just let me know. Here on the dollar CAD then, right now we are making new lows, but only just. So we had a move lower, pull back, a move lower, a pull back, a move lower. So we're only just making new lows here. Let's go to the 240. And it's very ugly, this, but again, new low, pull back, new low, pull back. This was the new low, the pullback, and this was the new low. So we are in trend, but this is the type of trend I really want to stay away from. It's not directional enough. So let's go and take a look at the 60. There was a winning pattern here, by the way, guys. X to A to B, B to C, CD completion was up here. The double top was not valid on the lower time frame though. And then what we did from that point is it looks like we could be putting in an AB equals CD pattern down to this point. However, there is no structure looking left, so I would disregard the AB equals CD pattern. But there is also another advanced pattern here, which is X to A to B, B to C, CD completion down here at the 886. And if we're reading structure, we have, oh, I've just deleted that. And if we're reading structure, we had a move, a pullback, and then we've made a move lower, violating this level, an indication that we could come down to this level, which are the wicks. So as we drop down the time frames, we have, first of all, just going to move this out of the way, a rotation pattern up here, which has provided us a very nice pole just here, a very directional move. And if we draw this out based on the closes of the candles, we duplicate it and move it up. 1, 2, 3. We've come up for the fourth touch right now. I would personally be looking in the wicks. We also need to have fib confluence, a minimum of a 382. We've just tapped to the 382 right now. However, we have not come into the structure level. So I would wait. I would wait for price to come up to this structure level, see a hold, and then see a red candle. Just reading what Pete said. Pete, shh, I've had that for 7 years. I ain't paying for it. So yeah, we certainly have room to go lower. Let's put on a fib from our swing low to our swing high. Look for that 127. Does that 127 come into our structure level? Yes, it does. It comes into it just here, so we are not shooting past structure. So yeah, this could be a valid flag pattern that sets up. And since you're a pattern trader, when you take targets at the 127, you can buy it all the way back up, and you can get yourself a nice 2-target winner. 23 pips that way, and about 17 pips that way. So yeah, good spot. Not going to be one for me because it's too small and it's late, so I won't be taking that trade. But yeah, valid opportunity if we go up here, and I would wait for structure to be held. And if we just move this trend line up, that is the highest the candle close can go until structure is violated. So if we close above that trend line now, structure has been violated. And that's just standard violation rules, standard structure hold and violation rules. The tops of the wicks, even though this is a rising channel, it is still structure. And if we violate it, if we physically close above it, the trade is null and void. And if you get an entry and then it turns the other way and closes above and pulls back and allows you to get out for break even, I would probably exit for break even. That's what I tend to do, because it's a clear violation. Good to see. That's what I'm waiting for too. Yeah, good spot, Sarah. Good spot. Khan, please have a look at the Swiss yen. See if you can make something out of it, as it was making a triangle. The Swiss yen. Isn't the Swiss yen what we're in? Nope. Okay. What time frame are you looking at, Khan? I remember this one. We took a loss on this, didn't we? A few weeks ago. Stupid breakout patterns. and then we broke above here. So we've had a clear violation of the structure level, but then what we did is we broke down. And what are we doing here, guys? What are all these wicks telling us? They're telling us two things, actually. No, that's Cadian. Yeah. Short-term memory peak. It's awful. Rejection. Yep. If we look up here, we have longer wicks to the upside compared to the downside. It's also telling us indecision, exactly, and sideways movement. If we actually look at the closes of the candles, they're moving sideways. So just looking at this, just reading the candlestick formations, I would say that we could see a move lower, but based on structure, there's nothing structurally here for me to pay attention to. Let's take a look at the 240. This is not going to be anything on the 240, and I don't think we're going to see anything on the 60 either. I see what you're looking at. We've got a pole here, Khan. We've got a directional move. Then we kind of had this. But from this point, we've just been all over the place. Now, if we go down, look at the 60, there's just nothing here. This is consolidation. This is breakout. This is advanced pattern stuff. This. Even there, you probably on the lower time frame might see one. There's another one there, a back pattern. There's one just here. If we drop down to the 15, there's another one as well. Well, I thought there was one on the 15. Yeah, so nothing here. No, not on the 60 can. We would need a pole. So if you're looking at this directional move, we draw it out on the closes of the candles. It's this isn't going to be for me. We're in consolidation. If you look, if we put a structure level on just here and we look left, there's no reason to believe that we're going to violate any of this junk right here. Nothing at all. Can or might be my order is active on it, so in my head I want to make something out of it. Honestly, I would stay away from this. I mean, just look at it. This is just junk. Absolute. The only things I would look at trading are advanced patterns, and Sarah's probably spotting all of these already. There's a cipher as well in that one. Yeah, they're the only things I would look at. If you're looking at this coming up to this level, just look at the structure left. There's just no reason to believe we would break to the downside. Never say never, but we don't just want opportunities. We don't just want triangles. We want them to meet rules that have been tested, verified, and live traded, and we know to be profitable. And even though this may turn out to be a triangle, I just wouldn't take it. It doesn't meet the rules. Delete. Nothing on that for me. Okay guys, anything else you want to talk about or go over? Sarah, let me know tomorrow if you will, if you win on this trade or if you get an entry. Would be nice to know. Yep, swipe it, get rid of it. Load of rubbish in my opinion. Okay guys, anything else? Okay, well, I've thoroughly enjoyed that. I will do some more of these evening reviews, particularly as we get more people and we get more questions and more questions about structure, things like that. So went over a few things there, found interesting. I got some feedback. I found that you like the Excel file. I know that you like the system. Things are going quite well. Great. Have a lovely evening. Thank you for joining me, and I will see you on the next webinar.